Hello, welcome back. So in today's video, I'll be covering the stocks that have been crashing as well as whether or not they provide decent opportunities now. So for reference, this is my entire portfolio. There have been stocks that have crashed massively over the past few months, like for example, United Health. But for today's video, I'll be covering stocks that are outside of this portfolio and evaluating whether or not they're decent buys right now. So the first stock that I'll be covering is Duolingo. So Duolingo is currently trading at less than $300 a share, currently trading at 120 times of earnings. So for this stock, the reason why the markets are talking about it today, the reason why you're seeing it a lot on YouTube is because Joseph Carlson, he actually started a position in this company. So he started a position at around $330 a share, and currently now it's trading at less than $300 a share. So for Duolingo, here are two of the tailwinds for the company, two theses for them. So first of all is that Duolingo is expanding its services to outside of just language learnings. So you're having chess, you're having music, you're having all these different other subjects on the app itself. So they're expanding their offerings and gamifying the entire platform to attract more use. That's one thesis for the company. The other thesis is that the company has higher retention, higher growth, and higher monthly active users. So the company is a high growing one with increasing monthly active users, increasing subscription numbers, highly sticky with your subscriptions and so on. But the markets already know this, and that is the problem that I see with a lot of the theses for Duolingo stock. So for Duolingo, the stock has fallen around 44% since the peak around 2 months ago. So whenever a stock falls like this, there are two questions that you should be asking yourself. First of all, is it valuation concern? Or second of all, is it something that is structurally wrong with the company? So when a stock falls like this, it is probably time for you to evaluate whether or not the original thesis was wrong. So for most of your high growth companies, they typically only grow between 3 to 5 years. So Duolingo has seen massive growth over the past few years already, and it will be a rarity for a company to continue growing at this rate over the next 5-10 years. Besides that, it is also impossible for you to predict whether or not it is a fad. So Pop Mart has been a fad for many years already. It is still doing well and the stock is rewarding shareholders. So when you're evaluating whether or not Duolingo is a fad, you need to ask yourself, is Duolingo something that is embedded in society today? And is it something that the youth won't stop using? If that is the case, then it will be sort of like a cultural thing. But of course, if it's just a fad, then the trend will likely die down over the next few years. So when evaluating Duolingo as well as its resilience, this is something that you could possibly look at, which is the average subscription period for Duolingo. So your average price for Duolingo is $7.70 per month, which aligns with their annual plan. So what that means is more people are signing up for their annual plan as compared to their monthly plan, which is a positive. Besides that, we can see over here that the average consumer only subscribes for around 5 months on the app. So this means that the company has incredibly high churn rate. So if you are to compare this to other companies like for example Spotify as well as Netflix, Spotify's average subscription period is between 2 to 3 years, Netflix is between 3 to 4 years, and that's why these two companies have been so resilient over the past few years. Whereas for Duolingo, it is only between 3 and 4 months, so there's clearly a disconnect here. This comparison is definitely flawed. People trying to draw links between Spotify, Netflix as well as Duolingo is off the mark in my opinion. So unless Duolingo can keep bringing in new users, this level of churn will come back to bite the company in the future because this clearly shows that they don't have a very sticky product. So what exactly should you be doing with fads like Duolingo for example? So the first question to ask yourself is the company doing anything to protect its hype? So social media presence, yes, the company is actively pushing on social media. It has an extremely big platform on TikTok. But this is a risky one at the same time, being very reliant on social medias. Spotify doesn't really use that. Netflix only uses that to an extent, but it is not an initiative that is pushed out by the company itself. The second thing that Duolingo is doing right now is to expand their product offerings. So they're trying to gamify the entire platform. They're trying to venture out of just language learning. But of course, the majority of Duolingo subscribers are actually your youths. So your youths have low purchasing power, and they will likely unsubscribe as soon as they get the product. And the lifetime value for all these different youths is likely not as large as compared to Netflix as well as Spotify. So for Duolingo's AI threat as well, this is another portion I'll be covering. The company is facing existential threat based on this article here, as Google Translate rolls out more features to tutor users and even handle live translation as a bonus. So there's a counter argument by Boost as well, which is that AI won't displace Duolingo, but the very fact that there is this threat clearly shows that the company could eventually be disrupted in the future. So it's a risk that you will have to bear with if you're interested in owning the company. Is the fall justified? That's the next question that we should be asking ourselves. So first of all, the valuation today is at 120 times earnings. The valuation is still extremely demanding. Price to operating cash flow is 40 times, price to free cash flow is 41 times. But of course, a majority of those two components is actually made up by stock-based compensation. Besides that, the questions to ask yourself will be the predictability and growth as well as the moat of the business. So predictability wise, they have 85% of their total revenue coming in from language learnings. So that 85% is at risk of AI. It's much easier to shift your consumers than to shift institutions. And that's why it is impossible for you to swap away from Microsoft's products because they are institutionalized and more of your workplace solutions. Whereas for apps like Duolingo and apps like Check, for example, AI is unpredictable. AI could definitely displace them, like what they did with Check. Next factor is with regards to the growth. So the growth is still strong, but your monthly active users actually dropped for the first time in many months. That was because of the backlash that they received on social media, so that is a concern as well. Lastly, the company has no moat. I view this company as a company that doesn't have a significant moat. It's a company that rides on the trend. So for me, this is a company that is probably in a too hard pulp. So this is what it takes for Duolingo to work. So first of all, the language learning and game app needs to become a necessity in people's lives so that the company can continually grow at this rate, so that the valuation can basically compress down to a more reasonable price. I think a fair PE ratio for this company would be between a 30 and 40 times earnings, similar to your other software companies. So in order for the company to reach this valuation, it not only has to grow, it will have to grow at a very fast rate. So unless you are expecting Duolingo to continually grow at 30% over the next 2 to 3 years, then I view this company as extremely overvalued today. Next company that I'll be covering is actually Otters. So Otters year to date is down around 6%, currently trading at a 22 times of earnings. So this company is a decent quality one that I'll be covering today. So for Otters, here are some of the theses for the company. First of all, you have secular tailwinds. So population growth, urbanization, remodeling, where and there. All these are tailwinds for the company. So the company is actively trying to expand out of China as well as the US into areas like Japan, like Southeast Asia and so on. And besides that, the company is increasingly concentrated in your services revenue line. So services have become a core component of Otters' business, and with long-term contracts that are sticky with built-in price increases as well, this brings in a predictable stream of income into the company. So price increases that beat inflation plus sticky revenue is something that is extremely important for a company like Otters. And with the installed base growing as well, you could definitely see this revenue portion growing over the next few years. So first of all, the housing market in China is weak right now and it is still declining. So they currently have around 17% of their entire revenue coming from China portion. So that is why the company is seeing negative growth. If you are to remove the China portion, the company is actually growing quite decently. So Otters is trying to venture into other markets outside of China, including Japan, Southeast Asia, so there is less concentration risk in the future, which is overall a positive for the company. Besides that, how long will it take for this recovery to happen? So of course, the Chinese people, they are culturally a bit different from the Americans. They don't go back once they're scarred. So once there's a housing crisis in China, for example, then it will take many years for housing prices to normalize and for the demand to pick up again, because your consumers in China will be skeptical of the housing market. So the housing market recovery will spur growth for Otters, but of course it is impossible for you to predict how long that will take, whether or not a decline will continue over the next few years. So for Otters, I view this as a decently high quality company that is facing headwinds right now that could easily turn into tailwinds. Of course, it is hard to predict the tailwinds for this company, but if we can see the Chinese government basically pumping in more money into the housing market, then we could see a recovery in this segment, which will lead to a lot more growth for Otters, especially in the next few years. The next company that I'll be covering as well is Ulta Beauty. So Ulta Beauty is down around 7% today. It just reported its earnings. It's currently trading at around 18 times earnings post its earnings report. So for Ulta Beauty, I thought the earnings were quite decent. So their comparable sales, which is your same store sales, actually went up by around 7% this quarter. And net income also went up by around 3%, which was quite decent. So the company is forecasting, the company actually improved their guidance. So they're projecting around 2 to 3% increase in terms of your comparable sales. They're projecting around 10% increase in terms of the diluted EPS, which is overall positive for the company as well. So for Ulta Beauty, I think it is a company that is decently high quality. So ROIC of around 20%, EPS growth of around 10% or so over the next few years is definitely possible for a company like Ulta Beauty. Because what they're doing on top of the net income growth is they're buying back a lot of shares. Almost the entire free cash flow now is put into buybacks. So that is a positive for the company. Besides that, the company is trying to expand internationally as well, which is something that the market is not pricing in today. So the company is venturing into other markets like in Mexico, like in Asia as well. So that could be a tailwind for the company in the next few years, especially for all these different retail companies. Last portion, I'll be covering some questions left in the comments. So the first one, it says, hi Guan, is it the right time to enter into ASML? So I think ASML is undervalued today from a relative valuation perspective. I think the company deserves to trade at a 30 times of earnings. But of course, the company carries risk as well. It is one of the high quality businesses out there. But number one, it is not a direct beneficiary of AI. Number two, you have your China risk, which is something that you can't avoid for ASML. I mean, if you think that a company is trading at a decent size discount relative to its intrinsic value, then the company is definitely one that you could consider. But for me, ASML is a company that is risky. I'm actually thinking of trimming my position instead of adding to my position. The next comment, it says, what are your opinions on this company, which is Wolters Kluwer? So Wolters Kluwer, if you don't know, it's a company in Europe. So they have a lot of different software offerings in Europe. They have their tax portion, they have their education portion, they have their decision-making portion. So all these different portions come under this company, which is Wolters Kluwer. So Wolters Kluwer has been quite resilient over the past few years. I mean, if you have to look at the fundamentals of the company, it is decent. But I think the company is a bit too complex for me to fully understand it. And that's why I don't think I'll be investing into this one. The company is decent quality, of course. It is currently trading at a 22 times of earnings at a historical low. So if you're interested in the company, it could be a good time for you to look at it. But for me, I would probably stay out of this one. I hope you guys have found this one useful and invest safe.